The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon, right at this particular hour at 877-927-6648 on market days. And thank you to John and Steve, 2 great hours, 3 great hours. I mean, just terrific programming. And they kick off, John kicks us off at 8 o'clock. And we've got program. It's Wednesday. We go all the way till 7 this evening with Tom O'Brien, wrapping everything up. So when we look at the market itself, this is a very interesting period for a number of reasons. One is when you go to all-time highs, you really want to be checking out the technicals. Because so often, historically, we've gone to new all-time highs, and very soon after that, you see the stochastic and the MACD in daily charts start to weaken. Price might go a little bit higher, and eventually we pay the piper, and the market comes down sharply. In this particular instance, I'm looking at the E-minis. The E-minis have a high of 2002.75 made yesterday. We have not pierced that level or paralleled it to continue leg C. If there is no new recovery high, if there's no move above 2002.50, you need that 25 cents difference between yesterday's high and today, we're probably making a peak C in the daily chart of the E-minis. The 120-minute chart made a G/C. I'm calling it a G. And 2002.75, we've gone down. We've gone below the very strong up channel that's been in place since the 20th, 21st, around about there. That was made at 1973 and gone all the way to, 30 points high to 2002.75. Time for a little bit of a rest, and that's what's happening because we've gone underneath the up channel, inside track, Chapman Wave inside track support level. And that's going to be very important in the context of that former support now becomes resistance. Now, I'm going to do a couple of things here. First of all, I've got some notes, and I always tend to get so carried away right as the markets open. As my show opens with the market where it is, that I tend to forget to look down at my notebook. I have all these notebooks going back from ever since I started doing this show 11 and a half years ago. And what it says here is, look at, for the show today, Wednesday, look at a climactic low. Remember, we're talking about volume, and I said I only use volume in a specific way, but I use unbalanced volume all the time. So we're going to look at that. You know what? I'll do it right now. It takes just 2 seconds. So I want to show you something. Here we go. SY Symantec, SYMC, and that's the low of the 21st of March 2014. Have a look at this. This is the way I use volume. When I see a monster move up in volume, as there's a climactic low to the downside, now we don't know it's a climactic low, but it's a news-related sell everything type low. One day you're trading at, on the 20th, you're trading with a close at 20.91, having made a round number 21 high, and the next day you open down sharply, and you're down to the $17.95. 3 points, it's almost a 20% decline. Whoops, just like that. Well, when I see that happen, I check out volume. And my rule of thumb is that there is a certain number of days to the upside, if that happens, before a test of the low is incurred. And if that doesn't successfully come down to the low, you can double that number. Well, lo and behold, that's exactly what happened. And on the 11th of June at 2107, which is way above the 17 0.95 low of the 21st of March. You start a brand new buy signal, and each one of these has gone to peak D or E, and so it's another move to the upside, peak E, peak D, rogue wave spike to E, and that's where we are. That rogue wave spike to 25.35 is just sitting there. I'm not sure it's going to be hit for a little while. So that's the one thing I want you to look at. How do I use volume? That's how I use volume. One particular instance only, and that's in a climactic volume low. That's what I call it. Okay, now we're going to look at the SIU 114. I'd spoken earlier to John. Okay. And let me just get this right. So when John Logan was talking about different techniques that they have within his software program, he was talking about about silver. I said to him that I just dropped in a note into the den this morning to say, hey, I have a very interesting thing with the silver chart. In the Chapman wave methodology, there's something called the instant restart. When you get to a peak D, sometimes you can have what's called an instant restart because the price within 3 sessions goes to a new high, and certain conditions that I discussed very specifically in my Chapman Wave CD book called Introducing the Chapman Wave Methodology. You can buy it at TFNN. There's a technique that I developed over the years. This is one of those trial and error things that you just, the more you work at something, the more you can refine it. You know, let's just say you're a good cook. Well, what you were doing 5 years ago is probably not what you're doing now because you refined your techniques to certain, but you don't wait 3 minutes, you wait 4 minutes. You don't use this spoon, you use that spoon. And so this is exactly what happened with me with my instant restart. I found that there was a particular technique that said, if you went to a peak D, the fourth highest peak in the silver, that's from the low of the 30th of May at 18, this is the contract itself, the September contract, from the low of 18.65, you go 4 peaks higher. Well, within 2 bars, you go to a new recovery high, and you're above the 200 period moving average. But what I do is I draw a trend line to the side, a horizontal line, and this one also gives me a price time match, the left side to the right side. But most importantly, I call it a Chapman wave flat base restart. My techniques describe what they do. There's a flat base, and that base says that every time you break away from the low, in this case it's the low of 20.63 made on the 20th of June, if you keep coming down towards it, it's not your usual instant restart. It's a restart that says the low that you just made is going to be revisited at some time and probably pierced. And lo and behold, what does it do? It goes to 4 higher peaks, to another 4 peaks buy mode, to the high of the 10th of July at 21.63. And what does it do? It gives you a silent doji candle the following session. It says, be careful, because if you close down from here, you could be going down for a little while. And lo and behold, you do close very sharply down on the 14th of July. And on the 16th of July, you test at 20.63. That is exactly the low of 20.63, but it's not done because the MACD and stochastic are horrible. They look just terrible. So it gives you the bounce, that I call the H pattern. And then what does it do? It breaks the left side low bar, and then it keeps going down with those arch formations. And lo and behold, the 9-period exponential moving average, that black line there, says that is the resistance to close above, not once, but probably at least 2 out of 3, but better 3 out of 4 sessions before you made anything like a trend reversal. So I want you to talk about the Chapman wave flat base restart. Then I want you to talk about something else. In the 120-minute chart, look at this. What we've got, you know the pattern I just discussed, the H, oh, I haven't got my CD out. Maybe I'll get it during the break. I like to do things in a timely fashion. So let me just put it on right now. Okay, pop it out, pop it back in, and it'll show up as we're busy doing this. So what we've got is a pattern that says that the arch formation from 19.28 in the 120-minute chart made at 4 o'clock on the 21st of August has a very nice rebound. And what does that rebound do? That rebound goes to a peak C. This is what usually happens with this particular technique. It goes to a peak C. That becomes a peak C minus. Let me just put in my password here, 3. All right. Oops. two things at once. There you go. And we're looking at, this is the H pattern. We used to call it the dreaded H. I really like to just call it the lowercase h pattern right now. And this is exactly where it is. So let me just scroll down here. Click, click, click. There. So what you do is you make those scallop formations so that like a lowercase h, and you test it, and it fails, goes below the left side low bar, make another one, test it, and then all of a sudden you start to make much bigger H patterns. And what does that do? That says that within this context, you can make the lowercase h that goes to a lowercase m, and that can continue for a while until you retest the left side low bar, the most important one, that's the first one. And if you take it out significantly, you've got to be careful. But if you take it out and then pop back up, you can start a much bigger H pattern. That's exactly what happens here. Go to a peak D or a B minus right there on the at 10 o'clock on the 26th of August. You pull back, you retest. Look, 19.285, 19.285, 19.295, then 19.285. And now this is the first time that you could get a bigger a larger, I shouldn't say bigger, but a larger H pattern, and that's going to be the test. And why is it important? Because the dollar relationship to gold, and gold, of course, and silver go together, the dollar is pulling back sharply. It's at 82.41, down 24 cents. But that sharply doesn't mean anything. Look, you see that base of support there? And you see the way you broke above it? That's the same pattern with, instead of the H, you got a soft W or two U forms. And then you break to the upside, but then you come right back in. Well, have a look at this. Look what's happening. There's your dollar in leg D about to pull back. Now, this is going to be really interesting, and I'm going to go through it in other ways in a moment. But let me just do this for the moment. I want to say that the MACD is at very strong, and stochastics at 91% in the dollar. So this should hold the 82.20 to the 82.01 area, and then we're going to see how does the dollar rebound. Is there a corresponding pattern between the dollar and the QQQ series, which are really leading the market to the upside, but have stalled here at peak B, and I think that maybe even today or tomorrow we'll go to 99.69, which would give us leg C, and then all the little ducks will be in order because the Dow Diamonds, the SPY, the Dow, the S&P, the New York Stock Exchange, all these little guys are sitting together. Got a bunch of calls. I guess took a little too much time in my discussion here of these different aspects, but I haven't even discussed bonds or anything like that or gold. The Dow is up 16 at 17,123. The comp index is up 1 at 45.71. The S&P is up 0.67 at 2,000. 2,000, can you believe that? The gold is down 2 at 12.83. Silver's down 2 cents at 19.43. High-grade copper is at 3.1. I'm watching that 3 level. Copper starts to go under 3. Have a problem. Crude oil is at 93. Bonds are up 6.30 seconds at 126.07. Nope, bonds up 13 at 140. And 30 seconds. We'll be back with Scott and Ilka straight after this break. Basil Chapman, Tiger Technicians, Dow's up 18. Ooh.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman, Tiger Technicians Hour, this 27th day of August. Of course, 27th day. Today's the 27th. I almost forgot to do this. I am giving a talk tonight. I'm the guest speaker. Let me just find it if I can. Right. There it is. I'm the guest speaker over at Building E51, room 315, 70 Memorial Drive, Cambridge, Mass. This is the Boston Investors Group. This is the 11th anniversary, 10th anniversary. Oh, 11th anniversary meeting. Yes, 11th anniversary meeting. It says 10th in the middle of the precinct. Okay, we'll eat. Yeah, so it says 11th anniversary meeting for both the IBD meetup, the Boston Investors Group over at MIT. Please bring food, main dishes, sandwiches, veggies, munchies, desserts, drinks, cups, plates, or ice. You may bring wine if you like. We will use the first hour of the meeting to celebrate the 10th anniversary. We will eat 11th anniversary. We will eat in the lounge area outside room 315. Use the time to network. Pick the brains of your fellow traders. Introduce yourself to some of the members you haven't yet met. Please fill out a name tag and wear it. For the serious part of the meeting, we will have a market talk by Basil Chapman. Market talk by Basil Chapman says, oh, very kind of them, says, Bal is one of our most popular speakers. He will give us his inimitable analysis on the current market using his Chapman wave and technical analysis. He will also analyze some stocks of your choosing. And where is it? It's just off Memorial Drive at corner of Wadsworth Street and Amherst Street, 3rd floor. So it's just parallel to Memorial Drive. Go past the tennis courts. Of course, I always look at the tennis courts. It's about a block further. You mustn't miss that left turn, otherwise you're going to land up on O'Brien Drive or something like that in Somerville. So be careful there, or back and downtown. So the parking is really easy. Starts at 7, talk starts at 8, and then they shut the lights off at 10. If they shut the lights off at 11, we're sorry, probably still be there. So I'm getting this out the way there, and that's tonight. You can just go to Boston Investors Group if you want to get further information. Let's go to Scott in Safety Harbor. Scott, how are you?
Very good. Your call on BAC coagulated with mine. It bounced off the 1645.
Yes.
It's come back down now. It got a little scared up there. But I'm wondering today about a position with Apple. You know, you can't, it's like you said, when something is so ubiquitous, it's hard to, you know, I never make money when I join the crowd, so to speak, but
right.
It is what it is. I mean, and I'm not an Apple person, so it's all hard for me to digest.
Let me just do a couple of things here. Let me just, for those people who are listening, but maybe haven't got the chart in front of them, folks, Apple has made in the Chapman wave, it's made a peak B. It had one down day yesterday after kind of a doji candle yesterday, 2 days ago, 3 days ago. Today it's making a candle that says that the base of support at 100.70 to about 120 should be very good. 100.20. That's the 9-period moving average in the daily. But what's really fascinating is that it's walked the 9-period exponential moving average in the 120-minute chart. And I always talk about in the Chapman wave what we do is we go to the peak D, the 4th highest peak, and that's where you can expect something to happen. That would be a change. Well, in this case, the change was that all it did is the first peak D on 11:30 on the 15th of August was just a mere sideways move and held the 9-period moving average. The 4th bar, not the 3rd, but the 4th bar went above the previous high of 98.19, started a brand new move of 4 higher peaks. And what did it do? It went to another kind of doji candle high at 11:30 on the 25th, and then pulled back and made trough A, trough B, and now we're in legs C to the downside, with the stochastics flattening out at 45%. The MACD is not yet good. Now, do you have a position yet in Apple?
No, I sold out at 99 something, and I'm looking.
Oh, I remember. Okay, so you've been very
right.
So you've been patient. I like that. Being patient is really where it's at.
Unusual, but
right now, Scott. This is what I'm going to recommend. If I actually like the action of Apple here. The MACD is good. The stochastics at 91%. This is what I'm going to think. You don't have to jump in and do what I'm saying because you have a very good technique for yourself. But what I'm going to do,
I'm wondering, Basil, if this afternoon it might drop 50 cents.
Yeah. So let's do this. What I'm thinking is you got two choices. One is because it's made a peak B and in a strong bull phase, and this leg is definitely a bull phase for Apple on the daily chart. I would say that within 1 to 3 sessions, you need to be testing the previous high. That's kind of normal for a bull phase. So I'm going to suggest that if there is some strength, I'm going to do two things. One is I'm going to suggest you nibble right here at 101.12. You don't need more than a point and a quarter, 1% as a stop. Why? Because if there is a move to the upside, you're already in the position, and the moment it breaks 102.17, I would add at 102.18, I'd add another small position, and then you're on your own because that should be leg C, and that should move up at least a point or two. But the whole thing is that the base of 100.70 this morning, that's going to be key. So I'm going to
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and we're back right at this particular moment. We're back with Scott in Safety Harbor. We're looking at Apple, and my recommendation was to nibble right there as we were talking, and lo and behold, it went from 101.12 to 101.35, and it's broken out. It's in leg C in the 10-minute chart, which I especially wanted to do this. I was doing this during the break. So in the Chapman Wave methodology, we're always looking for peak Ds, and lo and behold, you got at 9:40 on the 22nd of August, you got the start that went to A, B, C, and then the gap up to D. It's pulled back very methodically, and now it's moving very nicely. So I like Apple, and even here, I would just do, you have to buy a little less than you would have, but I like the way it's acting. I think it's good. So I really hope that helps you, Scott, and I'm looking for a higher high above 102.17 for leg C, and then it should still make leg D. So that's exactly in the category of the QQQ series right now at B, and I'd like to see it go to C. I hope that helps you.
It helps, and I wish I was up there. I could attend your meeting tonight. I'm sure the weather is going to be fantastic.
Well, the weather is fantastic. Unfortunately, it's not outdoors, but I played outdoor tennis yesterday, which was fantastic. So this will be an indoor event. Hey, thanks for calling and congratulations on your BAC trade, and let's see what happens with Apple. Let's go to Ilka in Boston. Hi, Ilka. How are you?
I'm fine, Basil. How are you?
I'm well, thank you.
So you're playing tennis in the hot weather like this?
Oh, that wasn't even hot weather. Yeah, we can have, you know what hot weather is. It's almost, actually, it can get even worse than Florida here when it's really hot. Yeah, but...
That's good, that's good. It's wonderful to hear that you're enjoying yourself with the tennis, of course.
I am.
I'm calling because I just need a little confirmation from you. A dollar. I'm actually calling you regarding a dollar.
Okay.
I went in long euro for a little small because I think dollar still has a little one more leg up before the euro may actually move a little bit higher.
I think so too.
So tell me, is this a Stark leg of yours? And I'm waiting for that little D as a head.
Oh, okay. So we're looking at the daily chart of the
daily,
dollar.
Yes.
Okay. So this is what, folks, we're looking at here. We've already had the body. This is the neck. There was a 1-to-1 measured move to the upside to 82. What did I say that was? I think it was, 82.54. We went a little bit higher, went to 82.73.
Okay, good.
And that is the neck. Now, what I'm anticipating, because...
Oh, you have a different count.
I do. Oh, you know why? Because what I did is I used the instant restart as E/A, F/B, G/C at 81.72. And then we went on and we're in leg D right now.
So this would be the head. So that's good and long. The euro meaning.
I'm not sure because we've had a parallel move. It's a great question. And what I'm going to do is I'm going to put your question together with one that I believe is going to come up. I'm not sure if we will be there for it, but I hope it's going to work out. I want to do the relationship. I often talk about, I had years ago, maybe it was 2 years ago, I spoke about the three bears. It was VIXI, the VIX index, Dolly, the dollar, and Bondi, bonds. I only use techniques that are current, and once they're gone, they're gone. It's like my charts. When you see I'm done with a channel or whatever, they're gone. I just toss them aside. Sometimes I keep them there for educational purposes, but they are basically done. And what I was looking at here is that for the last quite a few months, we've been looking since July, let's say. We've been looking at the dollar rallying with the stock market, very unusual. We're looking at bonds rallying, or at least maybe not rallying, but holding really well with the stock market going higher. It's all-time highs. Very unusual. So I've thrown those away.
With you tonight.
What?
I was going to address that with you tonight, actually.
We can still address it tonight. So this is what I'm looking at here. Because of what we're looking at, so it's the volatility index. That's the one thing that's left. And that volatility index, as you can see, even today, it's not making new lows, but it is at the low end. It's in the buying. It's at the buying intensity level. So I still see residual strength. And I'm making sure that I have the patience. I don't know if I will have the patience, but I'm hoping to have the patience that until I get some kind of a signal in the QQQ series, and I get some kind of a signal, which I will go through in a short while, in the bonds, and I get some kind of a signal in the dollar, because those are the ones that have been holding well, I am going to be looking to see whether or not the relationship of parallel. Oh, I don't know if I can get there right now. Yeah, maybe I can. So this is the. Let me go and let me see if I can get that chart here. If I can find it. Ooh, let me just look at my list here, because if I can't find it, I'm going to resolve a bunch of things in one move. So let me see if I can get it. So I'm going to go here. I don't think I will. Not in time. Maybe at the next break I'll be able to get that. I wanted to show the relationship of how seldom the dollar and the market go up together, how seldom gold and the market go up together, how seldom, you remember there used to be some kind of relationship as gold was running, we had the market move up. Now that relationship is not there. All right, let's forget that. You got the question about the dollar, let's go right back.
In real healthy, regular market, you would want your currency to go up with the market, correct?
You would My belief has been that for a very long time, I'm talking years, that whack-a-mole has been in place for the dollar, because every time the dollar has a decent rally, it gets smacked down, and I believe it gets smacked down by the Fed. I once read...
And yes, and that, I agree with you. That has to do with the interest rates for current markets. I mean, for current
interest rates... It also has to do with the fact that a lower dollar helps the balance of payments. At least it used to. There might be a slightly different relationship. All right. And relationships, as someone just said in the den, relationships change. So what I'm looking at here is the dollar is still making that pattern that I spoke about in silver, that H, that lowercase h that goes to a lowercase m, that goes continually plays the same pattern. This is the first opportunity because of the stochastic and the MACD where the dollar has a chance to challenge the 84.75 high in the continuous contract, no, in the dollar index, the high that was made in July of last year. And if it does that, then 86.46, the 200 period moving average, will be hit for the first time since it broke down in April of 2003. So now let's just set that aside because that's looking longer term. And we've still got a leg C in the weekly chart. And this leg C is one of the first times that I'm looking at the technical indicators suggesting that the dollar, in fact, in the weekly chart could go even higher. I haven't said that for a long time, but this is the last few weeks is when I've said dollar is acting really well.
I agree with
now.
you.
Now let's go back to the pattern that I'm looking at. This is more rather than the stalk leg. This is more the propeller shaft where you've got a long leg up. Then this is the pattern that I used to study years ago, 20, 30 years ago. That it was a parallel move from the fulcrum of the propeller shaft in the middle, what I call the body, to the neck, but over the years, I found that, no, you get like a 1/3 or a slightly higher high, and that gave me that pattern that I call the Chapman wave stalk leg formation. So I'm suspecting that there will be a pullback, and that the worst case is that 81.71 will be tested in the index at some point, but a best case is that it doesn't even get there. It holds between 82.22 and 82.02, and you know that currencies tend to stay in the pattern for a very long time. Currencies don't change as often as market trends do, general equity trends. So I'm looking at this, and I think the dollar is acting very well, and that the euro has tried today to have a decent move. Let me just see, EUR, USD as a quick trade. Yeah, as a quick trade, I think it's good. Just be careful. I'm suspecting that...
No, I know, and I have a good stop. I mean, I have a very good entry. And I know why I have a different count. I am looking at a continuous contract on the dollar. You're looking at the contract. You're looking at a index.
Oh, yes.
At a DX.
Yeah, okay, so I'm looking at the index and
you're looking at DXY.
Correct, and the DXY. Oh, you know
I have a different count.
What happened to my notation? All right, I have to redo this one. A, B, C, D, and you've restarted A. You're actually in B, right, or G?
On my continuous, I mean C, actually, on a daily.
Okay, G or C. So, we don't disagree, and the way the MACD is acting and everything, I think the dollar's going to go a little higher.
I agree. Okay, very good. I just wanted to confirm that with...
Looking forward to seeing you tonight. And
I will be a little bit late, so I may only come for your talk, which that's the most important thing to me anyway. So
okay, thank you.
Looking forward to talking to you. Okay, take care. Bye-bye.
Thank you very much. Okay, let's go straight to John in Pennsylvania. Hi, John. How are you?
Hey, Basil. I'm very well.
Good.
You're all geared for the holiday weekend, are you?
I always forget about, it's the holiday weekend. I think we're going to be going away for a day or two. Yep, I believe I am. I haven't thought about it.
You're leaving that up to your social coordinator, I presume.
Absolutely, yeah.
There you go. Basil, I wanted to ask you about bonds, the ZB contract, the bond futures, and or TLT. And you prompted my interest. I think it was Monday. You went through what appears to be a fairly well-advanced Chapman wave count, looking at both the daily chart and the 2-hour chart.
Yes.
And what we can observe, of course, is bonds and the TLT bottom the first week of 2014 and have been in a strong rally mode since.
Correct.
And I'm looking ahead into September and October, and I'm wondering if you could in looking at both the weekly and monthly charts and the Chapman wave counts, answer this question. Is there any reason to be looking in the month of September or shortly thereafter for a tradable top, or is the evidence merely suggesting just an ongoing continuation of this rally phase?
Well, now, the question that you've asked is not one that I can answer with specificity because of the chart formation that we're looking at. That has a relationship that goes to the Fed. So if I was looking at this purely as a chart formation, and you remember it was, ever since I've been here at TFNN, I've spoken about at some point in the future, we would be looking at the Japanization of our bond yields, that we will go to almost 0% when the economy is suffering. But I never anticipated that there'd be an incredible move in the general stock markets that allowed bonds to go up as well. We should be having higher rates. That would be the normal thing. So this is absolutely, it's totally abnormal. You know that that the Fed, two things are going to happen. One is that the Fed will be late. I shouldn't say so emphatically, but the history is that the Fed is always late. And the other is that when we are looking at something that has extraneous influences, that all we can do, the best we can do is say, what are the chart patterns that seem to repeat over and over? The chart pattern I'm looking at says that there's a really good, I'm looking at the continuous contract. I know you don't like that, but this is the one that gives me the most information, and the highs and lows are all exactly right, but the prices are different because it gets smoothed out. So I'm looking at the high that was made in July of 2012. I have 140 and 10/30 seconds, but that's a price that's made up because it's smoothed out. But that is the high. I'm suspecting that we get close to, just under, or just above, and that is the point of greatest hazard. And that means you're going to make another U-shaped pattern, just like you did back here in 2010 in August, where it just went slightly above the high that was made in December of 2008. This is a 27, 28 up channel, but about a 30-year bull market. And you would never expect that bull markets can last that long, but when it's Fed induced, there's nothing you can do to stop it. And my suspicion is this is leg C, and that we will either fail at an F/C, or you'll actually make the D, and at that point, history would say that we're about to get a really, really sharp decline, and my suspicion is that it'll come from other factors, and it won't just be internationally induced by warfare or anything like that. Finally, we'll have something that has the economic news day by day come out as negative. I get very nervous when everything is coming right, and finally you've got the economists saying we're out of the recession, everything's great, because that's when things happen. But when you've got the Fed, and all I can show you is an up channel of the weekly, we haven't even broken this mid-channel support line. Let me make it in a different color, so I'll make it in red. I'll make it in pink. Look at that support line. We haven't even broken that. We are trying to head towards slightly higher high. Now I'm just going to go, because we want apples to apples. I'll go to the Z contract for Z in the den. Well, no, I won't. I'll go to the US. If you don't mind, I'm going to the September contract, and that says that we should go slightly above 141 and 21/30 seconds. That's where I've got to watch it really closely. So the support is at 140 to 139. Hope that helps you, John.
Thanks so much.
Thank you very much. That was John, and we'll be right back, and we'll sum things up.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Don't forget to listen to Larry straight after me. This is exactly the kind of market. I know that he's getting butterflies and Gartleys all over the show. I just wanted to show you that Apple is now trading at 101.79. It hit almost 102. Nice move, like see in the 10-minute chart. But I do want to go through a bunch of things that I got asked about, so I'm going to do this right now. So I was asked about U.S. Steel Corporation. I like it very much. We actually owned the darn thing way back. I hate it when I look back at the stocks that we owned, and they've done fantastically. We don't have it now. It's acting very well. I'm going to take a moment tomorrow. what is today? Wednesday. Yeah, tomorrow, Thursday. I will talk about U.S. Steel. X is the symbol, trading down 43 cents. It's still acting quite strongly. I think it's going to go a little higher. There's time, and the person's waiting for it to get back to the 42, 43 level. So I want to talk about that. I don't want to take time right now other than to say I'm watching it real closely because the weekly chart is making leg B, and it's kind of a doji candle, but the technicals are very strong, and it looks like it wants to hit 40.17, the 200-period exponential moving average in the 200 EMA in the monthly chart. So I'll get back to that. I also wanted to talk, I spoke about the volume climatic low in SYMC, spoke about silver, about the patterns. Also wanted to talk just momentarily about hotels. Remember I spoke about, this is about a year ago, I said what the airlines are doing. Every single business sector is going to try the same thing. A la carte, pay for everything. You don't even know what you're paying for. And look at this. The hotels are charging you for stuff that you might not even use. It's disgusting. But you know what? This is the phase. It's the bubble phase. And eventually only one or two of these things will stick, but they will stick. But they will eventually come right back to saying, we'll give you a bunch of things when times are bad again. But you have to wait. The other thing is Park City. I just saw it. I glanced at it. I saw it go by on CNBC. There's a contract they forgot to sign. You know, this reminds me of when BMW and Volkswagen bought Rolls-Royce and Bentley. That I think it was BMW or forgot that they didn't sign the papers for the copyright to the name Rolls-Royce. I mean, come on. Okay. Anyway, I wanted to get back to the market. So let me do this before we break. And I just want you to say the volatility index is still quite low at 1173. My suspicion is we are very close, within we are within about 5 sessions. 3? Could it be 3? No, it must be within about 5 sessions sometime next week where you finally get the Qs making that leg D, and that's where the Dow and the S&P might be in leg E. I don't know. But I think we're getting real close to some kind of a pullback, and that pullback could be quite ferocious. It'll be very sudden, and it will be accompanied by bad news, economic news, rather than this in and out business of the Middle East or whatever. So that's what I wanted to say about the VIX index and numbers to look at. As far as I'm concerned, let me just go to, look, here's the chart. Just take a picture of this chart. That's the chart that we've been looking at. I don't know if it's going to be accurate, but so far it's been very nice. And this is leg C, probably peak C at 17,153 from yesterday, unless there's a sudden spike to the upside today to take out that level, to extend C. But this is the area where I think we're going to have the greatest chance of some kind of a topping formation, unless the Dow just miraculously spirals into the 12,290 to 17,290 to 17,330 area. Meantime, we're still going up, as far as I can tell, and you've got to keep in mind that XLF, I promised I would talk about the XLF. The XLF is making a leg B right now. I suspect it will go to a C and a D, and it doesn't have to be all that much higher than 2344. So you can go to C at 2390. I'm suspecting the 24s to the low 25s will be the area that we've got to be most careful of in the XLF, which is the S&P Select Financial Spider. And as I say, next week we're going to be looking at bonds, the dollar, the euro, the VIX, just a bunch of things that are going to give us clues. Stay tuned for Larry. Should be a wonderful show as always, and I will be back tomorrow, and I'm looking forward to meeting you, some of you tonight over at MIT at the Boston.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.